Hi everyone, and thank you for tuning in. In this video, I'm going to answer the question if Walmart is an excellent dividend stock to buy following its fiscal 2023 fourth quarter results. So let's get into its earnings announcement and see if the stock is a buy right now. Overall revenue increased by 8.8% in the third quarter to 151.5 billion. Adjusted earnings per share increased by 3.4% to $1.50. Gross profit rate of 23.7% was down by 90 basis points year over year. This was impressive growth in earnings, revenue, and a moderate decrease in gross profit considering the macroeconomic backdrop Walmart was operating in its most recent quarter. The coronavirus pandemic and its consequences have fueled an ugly bout of inflation, and so businesses are facing rising costs across the board. The fact that Walmart was able to keep its gross profit rate relatively stable, only dropping by 90 basis points year over year, was impressive. And inventories is a big story here of retail companies. I've been following several retail companies, including Walmart, Target, and more, Amazon and others. And inventories have been a big problem with these companies since they overinvested in inventory following the out of stock and sold out conditions they had in the earlier parts of the pandemic, so they overcompensated. For Walmart, inventories of 64.7 billion were up by just 12.6% from the same quarter last year. This is only a moderate increase, especially if you consider that inflation has caused prices to increase by about 8% year over year. So most of the rise in inventory value here is caused by inflation for Walmart, not because of a rise so much in units in the number of items it's holding. And so this is not as big of a problem for Walmart to get through, certainly not as big of a problem as its primary competitor in the US, Target, is facing. So good news here for Walmart stock investors in terms of its inventory surplus. Walmart has worked through most of that inventory surplus. Also, Walmart has made solid progress in its availability of offering ordering online, picking up in store. That's now available in 4,600 locations. Same day delivery is available in over 3,900 of its stores. These two service options have been incredibly popular with customers of all businesses that offer this, right? The three main companies that offer this that I follow that have shown evidence that customers are loving this is Target, Home Depot, and Walmart. They're all saying, CEOs and management of these three companies are all saying how much customers are loving this service, how much of the percentage of overall online sales are being fulfilled by these services. And that's great news because not only is it something that customers want, but it's also a cheaper option for Walmart, right? If a customer buys online and then goes and picks it up in store, that costs Walmart less than when a customer buys it online and Walmart has to ship it to the customer's home. So when a customer comes and picks it up, that saves Walmart a ton of money, and at the same time, the customer is pleased with this transaction because the customer can go pick it up within a couple of hours of ordering it online instead of waiting for 2 or 3 days or maybe more to receive the item in the mail. So it's a win-win situation here, and it's a great move for Walmart to continue investing in this, and it's great news for Walmart stock investors. In its most recent quarter, its strength in grocery sales was offset by weakness in general merchandise in items like electronics and apparel, which is to be understood. Consumers bought a lot of electronics during the pandemic: computers, TVs, widescreen TVs, printers, anything you might need for your home office. All of those things were purchased in great quantities during the earlier stages of the pandemic because people were spending a lot more time at home. And the nature of these products is that they're longer lasting. You know, if you buy a big screen TV, it's probably going to last you at least a few years. And so you're not going to be buying a new one every 2 years, and so that's going to decrease sales for Walmart in the near term because it pulled forward sales of those types of items. Year to date, so far in fiscal 2023, Walmart has paid $4.6 billion in dividends, and the fact that earnings per share also increased by 3.4% is good news for dividend investors in Walmart stock, because ultimately dividends are paid out of earnings, and dividends cannot grow without earnings growing longer term. So it's good news for dividend investors in Walmart stock. And also, Walmart raised its outlook for fiscal 2023 sales growth to 6.5%, and it raised the EPS decline to 5.5%. So overall for the year, earnings per share will decline. So on net, this was a good quarter for Walmart because it was better than was feared by investors. This inventory glut industry-wide raised fears that there would be widespread discounting and price markdowns to get rid of this inventory surplus, which was not as bad as expected for Walmart. Gross profit did not decline by as much, so far good news. But to answer the question that I posed in the beginning of the video, is Walmart an excellent dividend stock to buy right now? I would say not just yet. I would wait for this holiday quarter to pass through, and let's reevaluate the inventory level industry-wide before we go in and buy Walmart stock. There's elevated risk right now because of these inventory surpluses. Yes, Walmart's inventory surplus decreased, but that's not the case for competitors, especially Target. And so if Target's going to be experiencing widespread promotions and sales markdowns, that's going to hurt Walmart sales, because customers are going to see lower prices at Target and they're going to go to Target to shop for the holidays instead of Walmart. So for that reason, I would hold off before buying Walmart stock until after the holiday sales season is over, and then let's reevaluate Walmart stock if it's an excellent dividend stock to buy. Okay, so that's all I've got for this Walmart earnings update. If you've gained any value from this video, please go ahead and hit the like and subscribe button. It'll help me make more videos like this one. Thank you for watching, and I'll see you next time. I want to thank the Motley Fool for sponsoring this video. The Motley Fool is a company that provides investing insight and stock recommendations for all investors of all skill sets and risk levels. So I'm proud to partner with the Motley Fool to bring you 10 stock picks from their popular product, Stock Advisor. Stock Advisor has beaten the market by more than 3 times. Go to fool.com/Parkev to get your 10 stock picks now.